and welcome to the Riyal Deal, coming to you from the Al Arabiya English studios. This is your weekly bulletin, bringing you all the latest business news headlines and analysis from Saudi Arabia. Coming up today, Saudi Arabia announces a sharp reduction in prices for crude for Asian buyers in December. We ask why. We also get analysis on the latest GDP figures and what they tell us about the push to diversify away from oil. As Cenomi, the largest mall operator in Saudi Arabia, announces its Q3 results, we speak to the company's CEO for more on the company's performance and its strategy moving forwards. We'll be speaking to the CEO and the founder of the global chauffeur service Blacklane, in which the PIF-owned company TASARU is a strategic investor. We find out what the company's ambitions are in the kingdom. And Saudi Arabia takes centre stage at the World Travel Market in London with a spectacular pavilion showcasing the kingdom's scale, ambition and global tourism leadership. Now let's begin by looking at a couple of stories. Saudi Arabia, the world's top oil exporter, has announced the sharp reduction to prices for crude for Asian buyers in December, reducing its price to its lowest level in 11 months. Well, this decision comes just days after the OPEC Plus alliance agreed to raise production by 137,000 barrels per day for December, but then halt further output increases in the first quarter of 2026. Well, during Q3, the Saudi economy grew 5% from a year earlier. Oil activities expanded 8.2% year on year, followed by growth of 4.5% in non-oil activity, a significant figure as the kingdom accelerates efforts to diversify away from oil. Well, I'm joined now by Naif Alghaith, who is the chief economist at Riyad Bank. Thank you very much indeed for joining us, Naif. Always a pleasure talking to you. I'd just like to start by asking you, what do you read into the Saudi cut in the price of oil for Asian buyers?
Thank you very much, Tom, for having me. Yes, we saw yesterday the news of cutting the oil prices for the Asian market. Mainly, we could justify this one by the trend that we have been seeing in the oil, and also with the market share. We all know we have seen OPEC Plus just announce the projections or the production of the upcoming period, including Q1. That includes a modest increase, which shows that the OPEC Plus is aware of the demand expectation in the global economy, and also is aware of how much they needed to supply. This go align with the price cuts and for the Asian markets to gain the market share. So Saudi Arabia right now will be, for example, producing 10.1, unlike the month before. And this comes also at the same time with a price reduction for the Asian market to maintain their share and also increase the production.
Okay, so that announcement comes roughly at the same time as some new GDP growth figures. And I'd like to just start by asking you about those, what evolution we're seeing when it comes to non-oil growth and revenue.
That's correct. And for Q3, we have what is called flash estimate. So basically, it's the initial estimation of the GDP for the third quarter, not the full data, but this gives us some observation on what to almost get for the Q3. What we got is the GDP right now is registered 5%, which is the highest for this year. That was driven by the oil production, and which we have been seeing right now. Saudi Arabia is increasing their oil production. For the non-oil, we have seen 4.5 increase. Our projections right now is increasing. We go beyond 4.5% for the non-oil GDP. Initially, at the beginning of the year, we thought that the non-oil GDP will only grow at 4.5. Right now, we think it for the 2025 will go close to 5%. Q1 non-oil GDP grow by 4.9, and Q2 4.6. And now with 4.5, so that means we'll be having a high non-oil GDP. As going forward for Q4, we have seen also the PMI reading, which indicates to higher numbers. Latest reading goes above the 60, so it's way beyond the expansion. This gives us a comfortable to have non-oil GDP expansion beyond the 4.5%.
Okay, so overall, What sort of a sense of the health of the overall economy do we get from the latest GDP growth figures?
It shows that we still have non-oil GDP is growing at a very significant number. We still, although we have the oil is right now is picking up, still the non-oil GDP is contributing to the GDP beyond the 50%. This shows the Saudi economy is right now is diverting from relying to oil economy to more non-oil economy. The projections to keep up the momentum is there. We have seen also in the reading of the PMI, the future outlook for the firms is positive. All these point that we will be continuing in the momentum and the increase in the non-oil GDP.
Okay, and just lastly, Naif, there's been a couple of headlines the last few days about the budget deficit in Saudi Arabia. Just wonder if you could tell us what the latest is.
Sure. For Q3, the budget performance data came out. It shows what is the deficit up to the Q3. Up to Q3 is 181 billion. The expectation for the entire year is 245. So that means we still have more to spend. My own expectation that we won't reach the 245 deficit. It will be below that, given that we have revenues is increasing. The oil production we have seen, as we talked earlier, that will be increasing. That gives us more toward a deficit for this year, around 230 to 220. For next year, the budget preliminary statement indicate that we'll be having 165 deficit. This point that the continuous spending to support the non-oil GDP growth.
Okay, well, thank you very much indeed for that macro update. Naif Alghaith, Chief Economist at Riyad Bank, thank you very much for your time. Let's take a quick look at some of the other stories we're following for you. Saudi Aramco has reported Q3 adjusted net income of $28 billion, up slightly from a year earlier and surpassing analyst estimates. Well, the company president and CEO, Amin Nasser, said these results highlight resilience and efficiency and that production had been increased with minimal incremental cost. This year's BBAN Forum has been held at the Riyadh Front Exhibition and Conference Centre, bringing together startups, entrepreneurs and SMEs. The four-day event aimed to strengthen the kingdom's entrepreneurial ecosystem, accelerate SME growth and empower women, all very much in line with Vision 2030 goals. Well, female entrepreneurs made a strong showing, and female-founded startups accounted for about 18.5% of the more than 1,000 participating companies. According to a new report published by HSBC, 8 out of 10 global companies plan to increase trade and investment with Saudi Arabia over the next 5 years. Well, that report, which surveyed 4,000 decision makers across major markets, cited the kingdom's robust economy, stability, and pro-business reforms as being key drivers. Well, technology and infrastructure lead the list of sectors attracting the most investor interest. Now, founded in 2002, Cenomi is the largest mall operator in Saudi Arabia. Well, amongst the malls in their portfolio, the Al Nakil Mall in Riyadh and U-Walk in Jeddah. Well, Cenomi has just announced its Q3 results, and we're going to speak now to the CEO of Cenomi Centers, Alison Rehill-Erguven, who's going to tell us more about the company's performance last quarter and what plans Cenomi has moving forwards. Well, thank you very much indeed for taking the time to speak to us. Your third quarter results have just been released. What do they tell us?
So, look, the first 9 months of this year have been very strong for Cenomi Centers. Third quarter especially has been strong when compared to 2024. What it tells us is that our revenue continues to grow on a like-for-like basis. The first 9 months was about 5.5% like-for-like growth over 2024 when we exclude Mall of Dhahran. Our EBITDA has also continued to grow. I believe we've come in at 22% for the first 9 months of the year. The quarter three was also incredibly strong. There are some very interesting events that happened in quarter three specifically, such as the insurance settlement for Mall of Dhahran, which took over 3 years. But we settled on a payment of about 250 million SAR. So, that obviously has beneficial aspects to our P&L and to the balance sheet. But operatingly, we're doing very, very well. It's a very well-oiled machine, and we just continue from year to year to go from strength to strength.
Okay, so revenues are up. Let's talk about sales. How did sales perform in Q3?
Yeah, you know what? Interestingly, it's a good question. Tenant sales and our turnover rent percentage are both up this year. One great example is Riyadh launched the metro I believe it was the beginning of this year, Q4 of last year. And we have one asset that is connected to that metro entrance. And I saw double-digit growth, not only in my footfall because of the new metro, but also in my turnover rent. So our turnover rent and our tenant sales have performed quite well this year. Which coincides also with the fact that our footfall is up. So also for the first 9 months of this year, I have seen 98 million people come through our doors versus I think it was 91 like same period last year. So footfall's up over 6.5%. So when they correlate, your tenant sales should also go up at the same time.
Okay, well, that's a really interesting example, because I mean, anyone who's been to Riyadh knows traffic can be pretty heavy sometimes, and having assets on the metro map presumably means that the more the metro grows, the more you can assume footfall in your malls is going to grow.
In this case, yes.
Okay, let's talk about occupancy numbers. What are they doing at the moment? How are your malls performing?
So occupancy has remained relatively stable this year at around 92%. On average, our average occupancy is higher this year than last year. So that's also contributing to better tenant sales, better footfall, as well as the revenue increases.
Okay, so there are obviously lots of malls across the region, lots of malls in Saudi Arabia. What differentiates a Cenomi mall from another one?
If I speak from a B2B angle, our malls, on average, compared to our competitors, we have higher occupancy and we have higher leasing rates. Okay. If I compare them also to my competitors, but through a B2C lens, we again have higher occupancy, which leads to better customer visits, higher traffic, higher turnover. We just perform better. We have a dominant position. Fortunately, we're in 10 different cities across the kingdom, and we touch about 80% of the population. So we're a fantastic bellwether for retailers, and we have really strong retail partnerships. And I think that shows through in the tenant mix that we provide.
Yeah, I wanted to ask you a bit about the mix in a mall. I mean, what's the ideal mix? Because, I mean, clearly there's a split between retail, entertainment, F&B. What's the secret sauce? What's the perfect ratio for those different areas?
That's a great question. When I first got here, so let's say in 21-22, the ratio was roughly 70% traditional retail, 30%, which was a combination of entertainment, food and beverage, services. We have shifted that. Now, I think we're landing at a 60-38 split at the moment, where 38 is now higher in food and beverage, in entertainment, in services, in lifestyle, salons, gyms, things that didn't really exist, maybe 5, 6, 7, 8 years ago, are, at least in an open environment, shopping environment, we're doing more of that. And then in traditional retail, which was very fashion and transactional related, we're morphing more into tech, beauty, accessory, things that actually our research shows are just performing really, really well in the kingdom in terms of percentage of like total retail sales.
Now, Alison, I've gathered you've got some really exciting projects in the pipeline, haven't you? There's Westfield, there's new malls lined up for Jeddah and Riyadh that are apparently close to completion. Just give us a sense of what's in the pipeline.
Yeah, sure. So we have 6 projects in the pipeline today, which take us all the way out to about 2028, 2029. In May of this year, we signed an exclusive licensing and strategic partnership with Unibail-Rodamco Westfield for the Westfield brand exclusively to us in the kingdom. It's important because this brand really resonates very strongly with the Saudi consumer because they are well traveled, they are well educated, they are tech savvy, and they go to specific destinations. And there's usually a Westfield shopping center in those destinations, i.e. Paris, London, New York, LA. And so with that, we will be launching 3 new assets starting actually next month in December. We're rebranding one of our assets in the East. It's currently Nakil Mal Dammam, and it will be Westfield Dammam, first week of December. And next year, we're in the development pipeline. We have 2 very large, beautiful flagship assets that are going to be launched in Q2 of next year, which will be Westfield Jeddah, and in Q3 next year, which will be Westfield Riyadh. And we are super excited about that.
I can imagine. It sounds extremely exciting. I mean, let's talk about the retail and mall ecosystem in Saudi Arabia. Is there anything you've noticed that sets it apart from other countries, perhaps in the region or more broadly?
I would say probably a decade ago, yes, just due to the constraints of how culture and life was then. But today, if you were to walk into any of my malls, you're going to you wouldn't know you're in Saudi Arabia. What does that mean? We have international brands. We have, wonderful design and beautiful fit out. It looks very international in terms of its standards and its design. And I would say that's true for me as well as some of my competitors. It's a very well understood landscape when you walk into a mall, and people are usually very surprised. So that's the misconception, is that it would look different, feel different, be different. It's not.
Okay, well, it certainly is the largest consumer market in the GCC. There are some 5 million households in Saudi Arabia, so the opportunities for retail are clearly enormous. Anything you can tell us about the habits or trends or anything that's emerging in the retail space there in Saudi Arabia?
Yeah, I can hit that from a couple of different perspectives. So firstly, you're correct. Largest population in the GCC, 50% of the retail sales in the GCC just in Saudi Arabia. Also has a very high GDP when you compare to developed countries. So it is going from strength to strength. I think the projection for retail sales on a compounded annual average is more than 5% through 2030. So in terms of being a shopping center business, we're placed very well for that. Our research also shows us that there's a strong supply coming of real estate and retail real estate specifically for the kingdom. But when you compare that to the demand and population growth and tourism numbers, there's still a supply gap. And so again, we're positioned really well to fill that gap. If you look at GLA per capita, which is the gross leasable area by square meter per capita, Riyadh is 0.5 square meters per capita. Jeddah is the same. Compare that to Dubai, which is 1.4 square meters per capita, or Abu Dhabi, which is, I believe, 2.2 square meters per capita. So, those 2 cities or regions in this region are, at least a decade more advanced than Saudi is today in terms of its transformation and where it's going. But you can see that there's runway just in those metrics in terms of what we can build and how we can, service the community.
Okay, Alison, I mean, we're approaching the end of this show, so we'll have to be quite brief on this next one. I mean, you took up your role in 2022, and when you did so, you became, I believe, the first foreign female CEO of a public company in Saudi Arabia. So congratulations for that. And I'm just wondering, when it comes to women taking up senior positions, executive roles like yours in Saudi Arabia, how are you seeing things change?
Look, I've been here now for not quite 3.5 years. I've seen a lot of change in that 3.5 years. I've tried to also make change here, in that 3.5 years. For example, we have a graduate program, and as of, I believe, last year, we began ensuring that 50% of the grads we pick are female and 50% of the grads we pick are male. It wasn't like that before. So, I'm proud of that. I am seeing more senior females taking up more leadership positions, but I still think there's a lot to do. It's actually something that plays on my mind about maybe how I don't know how I can help, or how I will continue to lead by example. But I know that there's something bigger there to take hold of. I don't know what it is yet, but I'm thinking about it.
All right, Alison, just lastly, we're very much focused on the run-up to 2030. Obviously, Vision 2030 is something we talk about a lot on this channel. But then beyond 2030, there's the World Cup and there's plenty of other very exciting events in the years ahead. What are your thoughts looking forward? What are you most excited about?
So, look, I don't know that there's any other place on earth right now that is as exciting to be in and be a part of, and to be a part of the building of, as Saudi Arabia, frankly. And I've lived in a lot of places in the world, and I've lived there usually in very dynamic time periods, like China, which was before this assignment, pre-COVID. So I think I feel very humbled and honored to be a part of that nation building. And this company is absolutely a part of that in terms of, Vision 2030 wants to move away from oil, go to more services. We're right there. We're front and center. More retail sales, more F&B. We're right there, front and center. So it's super, super exciting to not only watch the journey, but be a part of it.
Okay, well, we really appreciate your taking the time to speak to us. Alison, Rehill-Erguven, thank you very much indeed for your time.
Thank you so much. Pleasure.
Now, it's been a year since TASARU, which is fully owned by the Saudi Arabia Public Investment Fund, became a strategic investor in the global chauffeur service Blacklane. Well, during the 12 months that have passed since this partnership began, Blacklane has seen an 8-fold increase in revenue in the kingdom, and there are plans for Blacklane to expand its presence to new cities with a fleet of high-end vehicles and highly trained drivers. Well, Blacklane's ambitions mirror many of the ambitions of Vision 2030. We're going to speak now to Dr. Jens Wolthoff, who is the co-founder and CEO of Blacklane. Thank you very much indeed for taking the time to speak to us.
Thank you for the invitation, Tom.
Now, we are very much focused on Saudi Arabia on this show, and Blacklane is, of course, a well-established ride-hailing company with a strong presence in Saudi Arabia. A strategic investment has been made in your company by the PIF-owned TASARU, and I wonder if we could start by talking about that. How does the arrangement work?
So it's an investment into our global company with the focus to allow us to invest deeply into Saudi Arabia, working together with TASARU and other local partners to really bring also the mobility side of Vision 2030 to life. I think we have the right ingredients at hand. Now we're lucky to also have the right partners on our side, and that's why a year ago that investment happened and really made us scale.
Okay, I mean, some people will know Blacklane, others might not. Just tell us a bit about what sets Blacklane apart from some of the other well-known ride-sharing services.
So Blacklane is a global premium transportation provider, and we are serving a chauffeur experience. So we are calling ourselves a chauffeur service. That means really comfortable vehicles, luxury vehicles, well-educated chauffeurs that are steering those vehicles, welcoming the guests. And it's a very reliable, consistent, just great service that you can enjoy around the world. We are in over 50 countries, over 500 cities, have established a large presence in North America and in Europe in the first decade of our existence. And since a few years, we are doubling down on the Middle East.
Now, you're speaking to us from Riyadh, and I just wondered whether you could tell us a bit more about your operation in Saudi Arabia. And what sort of a fleet size are we talking about there, first of all?
We are talking by now about hundreds of cars that we have in our fleet. It's rapidly growing. Just in the last 12 months, we have 8x our revenue, so grew it by 8. times, and it's a challenge to keep up with that pace, also in terms of vehicles, but especially, as mentioned before, especially on the chauffeur side, because this is the maker and breaker of the experience. So we are really putting a lot of emphasis in upskilling our chauffeur base here in our chauffeur academies, training them to the perfect standards, so that it's always consistent, reliable, and that's what the country has needed.
Okay, let's talk a bit about your business model now. I want to ask you, I mean, are you working with third-party providers? Are you hiring directly? Just tell us a bit about how that side of things works.
So we are working with third-party chauffeur services that are partnering with us, but we are basically taking the whole capacity onto our platform. It's dedicated to Blacklane. They will only run on the Blacklane under the Blacklane brand umbrella, and therefore we are making sure that every detail is being controlled, especially on the service provider side, on the chauffeur side. That's why we put so much power into the chauffeur academies.
Okay, so that's the service side of things. Let's move on to talking about the product. What sort of cars are you using there in Saudi Arabia? And are we talking about an increasingly electric fleet? Tell us a bit about that.
Well, that's part of the Kingdom's vision. That's as always part of Blacklane's vision as well. Throughout the Middle East, we are pushing for electric vehicle uptake. In markets such as Dubai, where we started a little earlier, we have already reached electric vehicle share of 100%. So every car that Blacklane provides there is electric. And here we are also making great progress. We've started with 0 a year ago. We are now at 25% of all rides happening in KSA being in an electric vehicle. We have partnered just recently up with Lucid. So we are bringing a lot of premium Lucid vehicles into our fleet. We have Mercedes electric vehicles. So these sorts of cars and brands are the ones we are using. Also Mercedes S-classes, combustion engines still, BMWs. So really luxury vehicle brands that you can hire on the Blacklane platform. But we are pushing very hard on the EV adoption side. That includes actually also that we invest into the infrastructure, because that is the challenge. And so we have partnered with EVIC as well here in KSA in order to bring up more charging stations to feed our growing fleet. Okay, so you say your growing fleet does in fact contain some Saudi brands. Is the idea to grow that even further? Absolutely, absolutely. We are just at the starting point. We have just launched the partnership with Lucid. So those 25% of rides can only be seen as a starting point. Now tell us a bit about who is a typical Blacklane client. Who are you aiming at? What's their profile? So typically it's a frequent traveler. That can be an individual, that can be a corporate user, that can be a passenger from an airline or a credit card holder. Those that often need mobility and often need comfortable, reliable and consistent mobility, those are our typical customers. That can be an hourly booking to go around the city like in a roadshow style. That can be part of an event to go there with your family, but often typically also the airport ride, both in the origin of the flight and in the destination of the flight. City to city is a phenomenally quickly growing part of our offering here as well. So going from Jeddah to Mecca, for instance, or Riyadh to Dammam, those are really racetracks for us, because we are filling a big gap that was there before. Now, one thing we talk about quite often on this program is the rising number of tourists visiting Saudi Arabia. I'm wondering if those rising visitor numbers are translating into greater demand for services like yours. 100%. Like the investment that the Kingdom is pushing into this the tourism sector, also into the luxury and premium tourism sector, be it hotels, but also big events that are driving this. This is becoming a very, very attractive tourist destination as we speak. And that's a huge surge that we are also feeling in our numbers. And given that we have been around for quite some while now and are well known in North America and Europe, so all of those customers are very happy that we are now growing our presence here. They are used to the brand, they are used to the quality of it. So it's a win-win for all sides. Okay, so
what you obviously offer is a service that's vastly superior to that of the average ride-sharing platform that people will be used to. But a lot of those companies that I'm thinking of are actually setting up premium services of their own with skilled chauffeurs and premium vehicles. We're starting to see more of that, not just globally, but also the regional players as well. And I'm thinking to myself, isn't that potential competition for you guys?
I'm welcoming every competition because it only shows that we are operating in a very attractive target market and a market segment, and every competition helps at the end the whole industry to become better. It's good for the customers. We are not planning to lose our competitive edge on the quality side, so we are constantly improving and developing, evolving also our chauffeur training standards. And that's the reason why our customers are coming back so frequently.
Okay, I want to ask you now a bit about doing business in Saudi Arabia. What's been your experience and how have you found things, particularly in terms of regulation?
I'm surprised and really impressed by the hospitality, the welcoming culture that we are facing here. So it has been not difficult at all to get in contact with the right people, with the right organization, with the potential right partners. There is a huge appetite for a service like ours. And if you think about this mobility offering that we have, pretty much everything that moves needs to close that gap of bringing people from A to B, and therefore we are seeing a huge potential target market and closing partnerships one after the other. Regulatory wise, also super supportive because we are really offering something that progresses the development of the sector. We are evolving it together with the investment also of TASARU Mobility Investment. Obviously, we also have the honor to help to always have a helping hand to steer us, especially in the earlier days, to steer us through the system, and it has not been a challenge.
Okay, just before we wrap up, I wanted to ask you whether there was any update on a potential IPO for Blacklane, because in 2019 there was some discussion of a planned IPO. Just wondered, where are we with that?
Yeah, that was just a year before that pandemic hit our world. So that obviously has influenced quite a bit in the travel space and us being a travel player as well. So we are keeping our options open. Since COVID, we have grown phenomenally fast, not only here in KSA but also globally. We are seeing huge growth numbers. We saying thanks to the financing round that is a year ago, that has happened a year ago. We are having all options on the table and all the flexibility. So we are focusing on continuing to succeed with our business model, to grow as fast as we can without compromising the quality level. That is the brand promise of Blacklane. So let's see.
All right, you're keeping your options open by the sounds of things. No update or no date yet as such?
No date, no confirmation about that is the path. Any other paths, this is totally open. We are just happy that Blacklane is developing so well.
Okay, let's wrap up our conversation. You've mentioned Vision 2030 a few times during this conversation, and I wanted to ask you to summarize how you see the alignment between your mission as Blacklane and Saudi Arabia's Vision 2030. Where are you seeing the convergences?
Yeah, so they are actually very close together. We are pushing for a sustainable future of mobility, and that's part of the vision. It's about developing the mobility space, evolving the premium luxury mobility space. It's about innovation in general. We are heavily empowered by technology, and we are applying a lot and learn a lot also here from that market. And we are upskilling our chauffeur base, and we are talking now about hundreds of jobs we are creating, and in a few years we will talk about thousands of jobs that we are helping to get into our industry. It's a high quality job and very attractive in many ways. So we are going hand in hand with that ambitious vision, and we are happy that also Blacklane has the same level of ambition.
Okay, well, we really appreciate you taking the time to speak to us. Wish you all the very best with your ventures in Saudi Arabia. Dr. Jens Walthoff, the co-founder and CEO of Blacklane. Thank you for your time, sir.
Thank you so much for the invitation, Tom.
And finally, Saudi Arabia took centre stage at the World Travel Market in London. Well, led by the Saudi Tourism Authority, a spectacular Saudi Land pavilion showcased the kingdom's scale, ambition and global tourism leadership. Well, from Alula's ancient heritage to Riyadh's modern skylines, the kingdom is seeking to redefine world-class travel experiences and shape the future of global tourism. Well, Saudi Arabia welcomed 60.9 million visitors in the first half of 2025, making the country the world's fastest growing tourist destination. That is all we have time for. Thank you very much indeed for watching the Riyal Deal here on Al Arabiya English. Look forward to seeing you again next week. Thanks for watching. Bye-bye.